Hey everybody, it's me, Gregory Mannarino. How are you today? This lovely Sunday, seriously, September 16th, 2018, and my newest segment of Markets, a Look Ahead. Let's try to put a perspective on what we all can expect to happen this week. I've been pondering this since Friday, and I think this is going to be a very interesting week for several reasons. So let's back up just a moment. The last time I did one of these little segments here was last Sunday. I explained to you that I believe the market would have a positive bias. We finished the week higher. Now, right at this moment, as I am doing this video blog at least, it appears that this trend will continue, but we have three things that we need to keep our eyes on, and that is going to really push this market either much higher or lower. So let's talk about that real quick. As we all know, if you follow my work, these trade wars are escalating. There's no end in sight, and there's a lot of misinformation here being put out. At this point here, understand, there are no winners. None. Zero. In this trade war, we are not winning. The United States, China is not winning. There are no winners. It's going to get worse. Now, we're going to see some of that this week. Now, this is how politics and the market kind of interact. If you have been paying attention to, this tariff talk as of late, President Trump has been talking about, another $200 billion in tariffs for China. Now, why hasn't it happened yet? What is he actually waiting for? It's pretty simple to a market guy like myself. He's waiting for the market to more or less price it in. Once the market accepts the fact that there's going to be more tariffs and the market kind of prices it in, then when it's instituted, once President Trump says, hey, you know what, we're going to hit China with another $200 billion here, the market will not react as violently. You understand? There's probably still going to be some wavering, but once something is priced in, then the market kind of digests it, and it'll more than likely play out to not be such a negative. You understand? This is the reason why our president has not yet hit China with that new $200 billion here. We all understand that President Trump wants the market to continue moving higher. He's done everything he possibly can to keep this stock market moving higher, which means piling on more debt than has ever been piled on in the history of the world. Last month, we just found out the highest government outlay or government spending in history. Well, almost $500 billion in 1 month. The more cash that we borrow into existence, the longer this charade will continue, at least through till the midterms. That's all the president is concerned with right now. It's about the midterm elections, keeping the illusion real. So, a couple other things we need to keep our eye on. And for that, I'm going to need you to go to my website, traderschoice.net, for which there is a link in the description of this video. We're going to look at some charts together, try to put a perspective on this. So if you're not on my website, please click on that link, watch this video there, and we're going to talk about some fun stuff. If you are already on my website, I'm going to open it up now. All right, I am on my lovely website. Let us do this. Let's go straight down center of the page all the way to the bottom. Let's look at this gauge here. I like starting off with this. Below current technical position of the S&P 500 week. We are very much in a strong buy mode, as you can see. And this gauge here, if you use nothing else on this entire page, pay attention to this because it has never been wrong since the day I have put this up here. Now, that doesn't mean that from a day to day we're not going to get some wavering, but over the week this is saying strong buy. I'm going to tend to agree with that here. Again, for the reason I discussed earlier, I believe that if President Trump is going to hit China with some more tariffs, he's been waiting for the market to price it in. If the market prices it in, well, then he'll be happy because there won't be any big sell-off. So let's look at a couple of other things that are super important. Let's look over here. Look at that bond market chart. That's pretty darn ugly. Big sell-off. You can see they tried to prop that up, fell back down. That's a problem. Let's look underneath that chart. Right there is the dollar bullish ETF. As we all know, dollar's been getting stronger on, again, the prospect of this escalating trade war. A lot of this, even if this whole trade war thing is already priced into the market, what the market actually does here is dependent upon what's going on here in the bond market and the dollar. If there is an overwhelming move into the dollar, that lower chart there, it says US dollar bullish ETF, and the dollar gets a lot stronger here, that will put pressure on stocks. Okay, I expect we're going to see, again, if we get an announcement about more tariffs here, a knee-jerk reaction into the dollar, a knee-jerk reaction into the bond market. If we do that, what we're going to see, beyond any doubt, is that that 10-year yield come back into the sweet spot. You understand? If people are in there buying bonds, the yield comes down. Now, again, there's that compensatory mechanism that I've been discussing with all of you for a long time. I would imagine you're bond market dollar experts by now. So even if the dollar strengthens a little bit here on some kind of news, and we get that move into the bond market, that'll still keep the 10-year yield in the sweet spot below 3%. If we start getting a move here, this is where we got to pay attention to the bond market and the 10-year yield. If we get a move here, a strong move from the market, let's say they doesn't really like what's going on here, and the 10-year yield goes above 3%, and the dollar gets stronger, this is stock market negative. All right? So again, I think our president is going to tiptoe here about with regard to his wording about more tariffs here to make sure the market doesn't react in a negative way. Again, going back to that gauge here at the bottom of this page, seeing a strong buy right now with regard to the S&P 500, the broader market index. You understand? Now, let's look right here, center of the page, my swing trading chart. We're in a screaming uptrend, as you can see. It's not stopping for months now. And this trend here, people, is more than likely going to continue until it doesn't. You understand? Until it doesn't. I'm not even going to talk about this day trading chart. This is more for advanced people that are trading daily, intraday. You can mess with these things. You can put in any symbol you want. Now, that's what I want to do. Let's look at other aspects of this market to see what we can get out of it. Now, right here on my swing trading chart, we're going to do what we usually do. I want to look at gold. This is paper gold. You know, it's not real. It's not on the elemental chart. However, it's something. So let's put in GLD, enter. All right. We've been in a screaming downtrend. However, we're kind of bottoming out here. You see what I'm talking about? We went down, we came up, and we're kind of staying at this level here. That's a tell, in my opinion here. Again, this is the paper derivative market. They can do whatever they want to do with this. It's not real. And in any way, there's no price discovery mechanism. However, I like to look at it to get an idea of what kind of fakery we can expect. I think they're having a little bit of a hard time rigging this here. Let's look at SLV. SLV, paper derivative of silver. Same kind of thing, screaming downtrend, but we're kind of bottoming out right now. I'm not saying this is a I know a lot of people out here with some pretty big names are calling for a bottom here with regard to gold and silver. look, I honestly do not know in this environment, because it's completely fake, how to price these things anymore. We know that there is no, again, price discovery mechanism connected to it. There's all kinds of rigging by the major banks that get caught red-handed over and over and over again. Nothing happens. They don't even get a slap on the wrist. I mean, it's a joke here. Banks getting caught rigging rates, all kinds of stuff. Nothing happens. It's because the people don't say anything anymore. People used to be strong. They had a backbone. They would yell and scream and say, "What's going on?" People don't even care today, who have an interest earning account, that they're actually, every day that they keep their cash in these accounts, they're losing purchasing power based against the actual rate of inflation. People don't care anymore. They've become dumbed down sheep. You know, it's like, bah, bah, bah. It's a crazy thing, but it's the truth. And that's why this whole thing will continue on, the charade, until it doesn't. Here's really the truth. All right, so look, I know this is getting kind of wordy, this entire video. I hope you play with these charts. You can do all kinds of things if you want to look at a specific company. For example, we just put in SLV. Let's look at, I don't know, let's look at Microsoft, MSFT. How are we looking here? It looks screaming uptrend here. There's no doubt about it. Let's put in, I don't know, Facebook, FB. Facebook is not looking too good here, although there might be some buying opportunities coming up. I don't know. Craziness, utter craziness. All right, so with that said, let's keep an eye on this market. We're watching for three things. You know what they are. We're going to be looking for escalations of trade wars. Our president is waiting. He wants it to be priced in. I think he believes it is priced in already. So we might get an announcement today, tomorrow, something along those lines. And we'll see how the market reacts to that. Again, the timing of this will be done specifically at a certain time to keep the markets where they are. It's his only concern. He doesn't care about the labor force participation rate. We're going to get fake numbers fist-fed to us, which he admitted were fake during the campaign, but now they are real. It's going to keep going. The people are just going to eat it up like they always do. We are more in debt today than we were yesterday, so our economy must be stronger today than it was yesterday. And tomorrow we'll have more debt, so our economy must be stronger tomorrow than it is today. That's the measure. And everything is being looked at through the lens of the stock market. It's a very frightening prospect, because we've seen this before too, and it always ends very badly. Anyway, look, I'm going to shut up here. I hope this has been informative to you, and we're going to keep this going. We will win. There's no doubt about it. Keep your eye on, again, trade war talk, escalation of trade wars this week. I think it's priced into the market so far. We got to watch that bond market. We got to watch the dollar. That 10-year yield needs to stay under 3%, especially if the dollar gets stronger. Okay, so we have a couple of things to look for. If things play out the way I just laid them out for you, and I think this is the most likely scenario, that is, tariffs are priced into the market. There's going to be a knee-jerk into the dollar, into the bond market. Then the stocks will rise. If not, if one of these dynamics here decides to go the wrong way, then that could change the whole thing. Then the market will go lower. But again, if things remain static the way they are, stocks will end the week higher. So let's see which way it goes. It is going to be a fun week. I honestly almost can't wait for tomorrow. I'll see you in the morning. Bye.